Today we look at 4 stocks from a technical perspective. When a market event happens in the life of a stock, what does it look like in chart language? And what does it mean? Is it bullish or bearish? Peter Ashton, Vice President at Recognia, joins me from Ottawa via Skype. Let's begin. Let's start in Canada. The first chart is the Canadian oil sands. What is this telling you, Peter?
Well, Canadian oil sands has certainly had a very good run since about January of this year, but the month of May has been tough for all the energy sector. What we see in this particular chart for Canadian oil sands is that the stock has formed a particular pattern called a continuation wedge. This is a bearish continuation pattern. It means the previous bearish trend we've seen in the month of May is likely to continue. So we just see the stock moving lower in the intermediate term.
So that would be a bearish signal.
That's correct.
Now the second chart is Descartes System.
So Descartes Systems Group is a software provider of logistics solutions, and this is actually a bullish pattern we've seen on Descartes Systems. It's something called a bullish continuation wedge. The stock has been up about 34% in the past 12 months. This particular pattern indicates a consolidation is taking place. We've recently surpassed the previous level of resistance, the upper part of the wedge, and it indicates that a new bullish trend is likely to take place.
So Peter, tell me a little bit about the background. How do these charts get created?
So Recognia has automated software which automatically scans the markets in Canada and the US. It looks at over 13,000 different instruments every day and identifies many different kinds of what we call technical events, events that are of interest from the perspective of technical analysis. We filter those events and score them and provide TD users with a list of daily trade ideas based on technical events taking place in the market.
So turning to the US, Peter, a very well-known name, Starbucks. What's that telling you?
Yeah, so Starbucks has been in a long-term uptrend almost for the last 6 years, and the stock is up about 40% in the last 12 months. We've had occur yesterday as a bullish pattern called a flag, and a flag is a pattern which suggests that a previous strong uptrend is likely to continue. We've had a short consolidation period. We've broken above the upper level of resistance, forming the flag, and we expect in the next 2 to 6 weeks to see a significant upside of Starbucks, perhaps as much as 9%.
And the fourth chart is Rice Energy.
So Rice Energy, of course, another energy stock, and all the energies are certainly struggling in the month of May. But again, we've had a pattern called a bearish continuation wedge on Rice Energy. This indicates that the previous bearish trend is likely to continue. And again, we see a much lower target price for Rice Energy in the future.
So what would you say is the most common mistake that investors make when they try to use these charts?
I think probably one of the most common mistakes is that investors tend to consider too small a universe in looking for their trade ideas. What we try to focus on is providing investors with a wide universe of stocks to consider and find the ones we think are best poised to move based on technical events taking place in the market.
Thank you very much, Peter.
Thank you for having me.
Some technical trading ideas from Peter Ashton at Recognia. These can be found in Web Broker. I'm Marianne Deveni. Thanks for watching.